Hi guys, it's Ian Coleman. It is Friday the 4th of June 2021, just past 10 o'clock in the morning in the UK. First Friday of the month, that means one thing, non-farm payroll today, the US employment figures. Last month was pretty disappointing. I think we got about 220, a build of 220, 220,000 that is. I think this month we're expecting a build of about 660, but there's rumours that we could get a build of around 990. Now, ADP employment was out yesterday. That was better than expected. That saw a drive higher in the dollar, and as such it's broken out of this head and shoulders formation that we've spoken about. But we have stalled. We're going to probably see consolidation into 1:30. So again, there's not really a clear picture for the US dollar at the moment. But let's get to the charts to talk about it, and then we'll run through the FX majors. Got a little bit wrong-footed yesterday. I was looking at sterling and the opportunity of getting short of sterling against crosses. Sterling has continued to move to the upside. It's actually broken one sim pattern and invalidated that, but we'll talk about the medium-term picture. Euro sterling is looking quite interesting if, and it is a big if at the moment, if sterling can hold on to its current levels. So let's get to the charts. Dollar. So let's get to the 4-hour chart first. So this is the big picture that we've been talking about. Sort of even I'm sitting here thinking, God, am I missing the move now? I've been talking about it for 3 weeks. Now we've moved to the upside and I'm not on it, which is quite frustrating to say the least, but I didn't get a full signal. And I have to stick to my trading plan because I know invariably if I don't, I will lose money. Here we've got the head and shoulders, so I think we could probably say that we have clearly broken out of the head and shoulders now. What has a tendency to happen normally, and this could quite easily happen before 1:30, is you get a retest of the breakout level, so a pullback to the next end. But do you remember we said there's warning signals here, and when we reflect this onto euro dollar, do we really want to be just buying at market? And again, we could get some fantastic figures out of the US today, and this could just fly and end up with nothing. But here we've got a reversal formation, so we've got this butterfly formation. So even though we've broken to the upside, we haven't broken and extended, and we're just holding around this level. And I just want to show you euro dollar here. So we've got the reverse on the euro dollar, or on the euro against the US dollar, I should say. And you know, there's scope for this to move to the upside, so it really is a mixed picture at the moment. What I would say is that normally in these cipher patterns, when you've got large gap, I should say, between the two formations, it has a tendency to reach the second. So 127.2% is at 120.97 at the moment. But let's go back to the single currencies. So again, mixed picture, could quite easily get a correction to the downside, and I wish things were clearer going into non-farm payroll. Now, this is quite interesting. So we had this sim pattern, we've moved lower, we've hit this 78.6%, so there's not a strong reversal here, but I love 78.6% fib levels because they line up with so many symmetrical patterns. And when I look at euro sterling, which I think is probably the favoured trade, or potential favoured trade today, we'd want to see a push to the upside here. So let's talk about sterling. Talks about this bearish outside day, okay, and the fact that we've pushed to the upside. This swing high is not higher than this swing high, so at the moment we are just about holding on to this pattern, okay. It can't breach this high. If we look to the left hand side, this gives us the information about the candles. If we look here, the high is 120.59, the high of this candle is 120.24, the high of this candle is, come here, 120.55. So we're just holding on to that previous swing high. If it does get broken, then this whole bearish scenario gets thrown out the window basically. What has happened is that this bearish scenario has got thrown out the window because we have breached, so we can remove the potential signal there. I haven't really got anything on this time frame, so it really we need to see a reversal in sterling pretty soon to keep this pattern alive. Quickly going through the others because they're sort of in no man's land at the moment. Swiss is doing nothing. You can just see this is the daily chart, it's just consolidating. Yen is doing exactly the same, consolidating. We're in the middle of patterns, pretty boring really. Dollar CAD, and again, would like to get short. This is the weekly chart, but I'm not getting the opportunity on intraday charts. Aussie dollar continue to push to the downside, and again, can't see any particular reason for a reversal in that now. New Zealand dollar actually pushed quite aggressively lower yesterday, and as a result, sterling, New Zealand sterling, Aussie moved quite aggressively higher. So let's just quickly move through the majors. So again, warning signs here. Really need to see a clear break of 120.97 and a push higher in that dollar index for this trend to continue, and then we look at this basically, which was the head and shoulders that we talked about before, and a move potentially down to 119.93. Cable, and again, this is why I think there's potential for cable to continue, or sterling to continue to the downside. We've got this wedge formation. It's common to retest. What I don't want to happen, which we've been talking about, is a stronger move higher. So in other words, retest, then a little dip, and then a move up to form a head and shoulders pattern, so left shoulder, head, and then forming a right shoulder. So again, really all to do with non-farm payroll, I think, today, and sterling. Dollar Swiss, I believe we've got a head and shoulders breakout, retest at 90.20. There's no sim patterns here, so out of all of the dollar majors, this is looking quite fruitful, if you like. Dollar yen, again, we're just holding on to this sim. We could move that. Sorry, we could just move that CD leg along there. Now, if that plays out, that means we are going to get worse figures. So basically, non-farm is the only, if you probably heard me say before, non-farm payroll is the only time I really like to play dollar yen, because you do get a disparity between dollar and yen. So bad figure, and the dollar should move to the downside and yen to move to the upside. So this would be a favoured play for this formation. It's a Gartley pattern to move lower. Dollar CAD, and I think we mentioned this yesterday. We said if there's any sort of bias of going long of the dollar, then this was the currency pair of choice, and we have moved up. Again, there's not much scope for a further move to the upside. 121.45, 121.51, and that flashes warning signs as far as the dollar's concerned. Again, we could smash all the way through there if we get a decent non-farm payroll. It's not my favourite day to trade, to be perfectly honest. And again, are we just going to see a little bit more selling pressure in Aussie dollar before buyers return? And again, that would say that we're going to get weaker dollar. So the dollar's mixed picture. There's a lot of currency pairs out there that are saying that we could potentially reverse. Non-farm payroll is going to be the catalyst. So that gets me onto euro sterling, and I quite like this. So big picture analysis. Let's go to here. I'm looking for this leg. So I'm looking for this to complete to the upside, which would be, which would be pretty bad for everybody that's going to Europe, but nobody's going to Europe anymore, are they? Not really. They've closed Portugal as well. So this is the pattern that I like. 85.70, 85.67, nice tight confluence area. Again, looking at correlation, we've got 78.6% on euro. We've got potential double top, treble top in sterling. We need to see a decent reversal formation around here to take this pair higher. And then euro yen, Come on, charts. Euro yen, we've had the wedge breakout. Targets down here, which is the start of the wedge, which is around about 132.50. Ample scope for a retest of the breakout level, which at the moment coming in at 133.87. So just to reiterate, dollar mixed picture going into non-farm. I think there's better trades to play if you're hungry to get on this morning. I think euro sterling could potentially be making a bottoming formation. When we look at this, there's ample scope ample scope for euro to move higher. When we look at euro dollar, again, if we're looking at this picture here, there's ample scope for euro to move higher. And when we look at this picture here, which is cable, hopefully there's limited scope for cable to move higher. So using correlation again, it's looking quite likely that euro sterling might be making a base pretty soon. Okay guys, good luck today, especially if you're trading non-farm payroll. You're braver than I am, and hopefully I'll be back soon with some more insights. If not, have a marvellous weekend, and I'll see you on Monday morning. Many thanks. Bye for now.